Hello and welcome back to AusBiz as we get across the open on this Monday morning. I'm Andrew Gagan. Thanks for joining us. Let's take a look. This is the global view, I should say. Let's take a look at what happened on Friday. Wall Street easing after a strong run with investor sentiment curbed by soft retail and consumer sentiment data. The S&P 500 slipping 0.1%, and similar moves there on the Dow and the Nasdaq. A sell-off among the chip makers did much of the damage, led by losses in Broadcom and Intel, while equipment maker Applied Materials, that fell more than 5% after its upbeat quarterly forecast failed to impress investors. On the Dow, Salesforce led the losers, off more than 2%, while Walt Disney was the bright spot, up around 2%. Workday surged nearly 26%. That's after the bell, after Reuters reported Silver Lake is in takeover talks with the company. Discussion still early and may not lead to a deal, it says, but it's reignited private takeover chatter across the software space. And Dutch payments giant Adyen jumping around 16% after posting a 19% net revenue growth in the first half. Well, US retail sales fell 0.6% in July. That's the steepest drop in more than a year, dragged lower by weakness in online sales, car dealerships and petrol stations. On top of that, the University of Michigan's preliminary consumer sentiment reading for August dropped to 51, down from 55.2 in July, as rising fuel and food prices linked to the Iran conflict weighed on household confidence. Well, eyes are turning now to the Fed's minutes from its July meeting midweek, with three hawkish dissents at that meeting, making it one to watch. And Iran has called on the US to accept defeat, while President Trump called Iran very evil and told Americans to prepare for continued high fuel prices as a result of the war. Progress towards peace talks and oil tanker traffic through the strategic Strait of Hormuz remained halted, with no sign the warring parties were moving toward ending the conflict. Well, the US two-year Treasury yield rose to 4.17%, the 10-year at 4.7%. Australian three-year government bond yield futures rose to 4.56%, while the 10-year was up to 5.06%. US dollar index down around 0.1%. The Aussie has risen to 70.9 US cents. Well, crude oil futures climbed more than $1 a barrel on Friday following takeover attacks and a lack of progress on a peace agreement between the Trump administration and Iran's leadership. Brent futures settling at just over $88 a barrel. Gold advanced, buoyed by a weaker dollar after weak retail sales and consumer sentiment tipped the scales in favour of interest rate hold by the Fed next month. Spot gold around $4,375 an ounce. Copper futures little changed, iron ore at $97 a tonne. And Bitcoin currently trading below $63,000. Well, let's get across what we're seeing on global markets. Greg Smith joining us from Generator Investment Management out of Auckland. Greg, good morning to you as we get this week underway. How have you opened there?
Oh, Andrew, yeah, good morning. We've actually opened low. We had a positive week last week, but we're NZ50's down 0.7%. And the big news, well, we've got a couple of results today, but I suppose a lot of interest in A2 Milks, which obviously will be opening in Australia shortly as well. So those shares are down over 10% as we open, so that's weighing a little bit.
That is a substantial hit. What's actually driving that? Obviously, a miss in the market size.
Yes, looking back, actual FY26 results were actually okay. I mean, you look at the infant formula sales in China, that market was flat, and there was growth there of 5%. They were doing well in nutritionals. They paid a $300 million special dividend. So there was sort of a lot to like looking back, but obviously stock markets and investors sort of look forward, and it was really disappointment in the guidance. They've had supply chain difficulties that sort of put them on the back foot a bit, and they're sort of really investing and spending now to sort of win that market share back, if you like. So revenue growth, they're looking at sort of, it's going to be weighted towards the second half as well. I think that's sort of the other issue, and margins are sort of being compressed. So EBITDA margins are looking at around about 15%. They said it's going to be materially down in the first half on the first half of 2026. So look, the shares haven't had a happy time. They're down over 10% and now down 30% year to date as well. So it wasn't that long ago, a few years ago, they were a bit of a darling, but certainly not today, not this year.
No. Indeed. Elsewhere, Freightways result, I see that's the logistics company. I would have thought, look, being logistics, freight, diesel prices, that's certainly would be weighing on its overall performance.
Oh, you're absolutely spot on. So look, the headline result wasn't, it was pretty strong. Net profit up 17%, 94 mil. Revenue that was up 13.5%, 1.46 bill. But you're quite right. They make the point that fuel affects the company's business in two ways. Being a logistics business, it costs more to put things on trucks, diesel and petrol, and also obviously dense discretionary spending across the economy as well, and that has an impact on freight volumes. So they said high fuel costs are having an impact in terms of those ways, in terms of those effects, should I say, softening consumer demand. They said freight volumes have been negative since April, and they described the outlook as softer for longer. So that's not ideal. There were some bright spots. They said the Allied Express business in Australia was doing quite well. They're investing in capacity for that rebound, which they see coming perhaps more in calendar 2027. Shares down 3%. They've had a happier time. They're still up around about 15% over the past 12 months. But yeah, a solid result, but difficult conditions and not getting any better in the near term, it would seem.
Greg, we have had JB Hi-Fi out of this result this morning, just pointing to some weakness, particularly in the first month of the new financial year. I think perhaps reflecting what we're seeing in retail also as far as its business in New Zealand is concerned. Overall, what are you seeing in the retail sector there?
Yeah, it's still pretty challenged. So we've had a print on our services sector this morning. So that's printed at 50.6. That's just above the just in sort of expansion territory, but it's certainly been in the doldrums for a while, unlike our manufacturing sector, which is doing really well. And that's on the basis of exports and a low Kiwi dollar is helping. But yeah, certainly domestically quite challenged, consumer quite challenged, although potentially some good news, looking forward for likes of JB Hi-Fi. What's going to depend on what happens with the war. Petrol prices over here down 6% in July from June. Diesel down 12%. So is that going to help consumers' wallets? We've also had some retail card spending numbers as it happens as well. And retail card spending in New Zealand was actually up 1.3% in July, but it's not really on those discretionary items, and I don't think it's sort of on TV sets or the type of entertainment sort of things that sort of JB Hi-Fi provides. Interestingly, one area that is doing really well for New Zealand, and has been a bright spot, of course, we've had agriculture, but it's hospitality, up around 3.2% or 46 million. And coincidentally, this is just the time as our hospo sector or tourism sector is doing really, really well. In fact, I have to thank Australians for sort of a helping hand there. The numbers are up pretty strongly in terms of Australians coming across the ditch, perhaps attracted by that New Zealand dollar that's weakened around about 10% over the year. So Aussie visitors to New Zealand in the year to June, 1.59 million. That's up 144,000 for the year. So yeah, hospo doing well, tourism doing well, durables doing okay, but yeah, some of those discretionary items not so much, and that's probably sort of reflected in what JB Hi-Fi is saying.
Yeah, certainly that exchange rate does make it enticing to head your way, I've got to say, which, well, you get the benefit too, obviously, with Aussie spending over there. Greg, look, we've also had NAB out this morning, look, pretty much reflecting what we've heard from the other big three here, of, in particular, mortgage growth there, or mortgage applications down substantially.
Yeah, for sure. So I think it's going to be interesting. Yeah, it follows obviously what we saw last week as well. So applications down 15% below second quarter levels. And I suppose the big question is, as a result of the budget and removing negative gearing and capital gains and so on, is this a temporary glitch? I think Westpac might have referred to it as a market in suspended animation, or is it something a bit more enduring? But all the banks are pretty much sending the same sort of message and saying that it's certainly becoming a more difficult operating environment in that regard with respect to housing activity, and it's also becoming more competitive as well. So credit quality, that'll be a focus as well. That seems to be holding up okay, but just time will tell. Those sort of glory years are sort of over. Obviously the housing market's been fairly unstoppable over there, but still, look, the banks, in absolute terms, making really good numbers. If you look at the third quarter cash profit for NAB, up 4%, 1.8 billion.
Greg, enjoy your week ahead. Thanks for joining us from Generator Investment Management.
My pleasure. Thanks, Andy.
All right, let's turn our attention to the local market then. So we've seen that softness over the past week on the S&P ASX 200. That is likely to continue. As you can see, SPI futures down 0.33%. And we are going to get right across those results, including NAB, BlueScope, A2 Milk, and JB Hi-Fi when we get going at the open. Stay with us for that.